This time I'd like to call the Joint Standing Committee on Insurance and PEIA to order. The chair looks to the clerk for establishment of the quorum. I'm informed the quorum is not yet established, and we will come back to the second order of business, to the third order of business, I'm sorry. Thank you for joining us today, and thank you for Marshall University for hosting us. This is certainly a wonderful venue, and for those who haven't looked out the window, I believe the fountain from the movie is right out that window, blocked only by that screen. So you're welcome to turn to campus. I would like to thank everyone for coming. I think we'll show you a good time the next 3 days. Hopefully you'll get an idea of what we're doing on this end of the state. But today we're here to continue our discussions about PEIA and also get into some insurance issues. We have two presentations today for the committee for your consideration. First, we have Matt Walker, who's going to discuss, and this is going to carry on from where we left off the last meeting about PEIA and PBMs. So if Mr. Walker would come forward, you will be hearing discussions about PEIA, pharmacy benefit managers, and independent pharmacy reimbursements. Mr. Walker. As is the custom of this committee, we do need to swear you in. You raise your right hand and you swear or affirm that the testimony you're about to give is the truth, the whole truth, and nothing but the truth, so help you God.
I do.
Please state your name and position for the record, and the floor is yours.
Thank you, Mr. Chairman. Thank you, members of the committee. My name is Matt Walker. I am here today as the Executive Director and Lobbyist for the West Virginia Independent Pharmacy Association. It's a group of around 100 West Virginia independent community pharmacies. I think there are around 200-ish independent pharmacies in the state. And I want to note that we work a lot in conjunction with or in collaboration with the Pharmacists Association. So I want to note that. Many of those pharmacists are pharmacy owners, work at the pharmacies that are members of ours, so we work closely with them. Really quickly, I wanted to talk about the current situation, especially as related to PEIA in the pharmacy world, some of the issues that independent community pharmacies are facing, and then I wanted to try to offer some ideas or some solutions based on best practices from around the country, some of the things that the legislature's put into code over the past 6 years or so. Our association started in late 2016, so we've been working on PBM and pharmacy issues since then. And then maybe make a few recommendations. The current situation. So I know that you met last month, and the legislature's heard a lot about PBMs and pharmacy issues over the past few years, so I won't go into a deep dive on what a PBM is or what they do, things like that. I think you have that basic foundational understanding. PEIA uses a PBM. I think that's necessary to process claims, which is really what a PBM was created to do many, many years ago. And I think that mission has kind of crept away from just processing claims over the years. And we'll talk a little bit more about that later. But we do think that PEIA does need a PBM to assist them. They're a pretty large plan, a nationwide plan. Really, there's a lack of trust between West Virginia's pharmacies and PEIA's PBMs that they've used in the past, currently, et cetera. You know, there have been some complaints filed since the Pharmacy Audit Integrity Act was put into code with the West Virginia Office of the Insurance Commissioner. That is the regulator in West Virginia for PBMs. There have been some fines, orders issued. We won't get into that deeply as that's all public record. You can check that out. But there have been some issues. We're hoping that PBMs follow the law. And we hope that the OIC will make sure of that. The main issue, I guess, if you take one huge thing away today, is that West Virginia's pharmacies are reimbursed well below cost for 95% plus of their brand prescriptions. And so these are brand drugs, not generics. Pharmacies are reimbursed at a small profit for most generic prescriptions. And we have a lot of data. I actually challenged my members over the past year to really collect a lot of data. And that spans 2 different PBMs, by the way, because PEIA switched their PBM on July 1st of last year. So we're looking at 2 different PBMs, and we're trying to track the profits and losses and where the big problems are. So they're losing on almost every brand, which are the very expensive drugs, by the way, in case you didn't know that. Those are the hundreds and even thousands, 10,000s, maybe even more, just to purchase those drugs. They're losing dollars on every one of those prescriptions almost. They're barely making a little bit of money on a generic prescription, which makes up the majority of the scripts they fill on a daily basis. And the problem is that the profits of any generic prescription for the whole day can get wiped out in one brand prescription. So you fill 30 prescriptions and you make $3 or $4 on every one of those that day, you're doing fine. You fill one bad brand prescription, you lose $600 and you're underwater for the entire day. That's just not something that's sustainable. And I guess I would use the analogy of an access cliff, because the more things like that happen around the country and in West Virginia, you're going to see pharmacies just not able to take those benefits. So I think, and I think my members would agree, that PEIA is very close, maybe even has even fallen off in some instances of a pharmacy access cliff, meaning West Virginians don't have access to fill scripts around the state, especially in rural underserved areas. You may have heard that Kroger left the Express Scripts network. So if you have PEI pharmacy benefits, you cannot fill those at a Kroger in West Virginia. And I feel like West Virginia independent pharmacies are next to go off the cliff. The one distinction I'll make, and we've had a lot of questions about this, an independent pharmacy or a Kroger, for example, can't just leave the PEIA network by itself. They leave the Express Scripts network, and that encompasses more than just PEIA. There are many, many different plans that are impacted. So it's a very nuanced, very complex thing. And there are others that could possibly go off this cliff. There have been pharmacies in the past, large pharmacies, that didn't participate with Express Scripts and others. So it's not just Express Scripts, but PEI as well. So we worry about our patients not having access to an independent pharmacy. Just a couple examples, and I tried to pick these at random. I tried to focus on some things that are well known, especially insulins. And anti-diabetic drugs, but you can see these are 4 different pharmacies, by the way. These are real claims. The drug cost, for example, just take the first one. This is an insulin. The pharmacy paid almost $540 to stock it, right? The PEI reimbursement, there you can see it. That was a loss of almost $60. The problem with this, and a loss is bad enough, right? If you are a business, you stock inventory, you dispense the prescription, you take a loss. Under PEI, a brand prescription is often a mandatory 90-day fill, which means your loss is not only exacerbated, multiplied by 3, there's actually a different contract that is brought into the fold whenever you fill one of those. And so the loss is more than a 3% loss, or 3 times loss. So you could have even a 5, 6, 7 times loss of this number if you fill that prescription. And the worst thing that can possibly happen for these pharmacies is to turn away their community members, their friends and family, and people that want to fill at their pharmacy or may not have access to another pharmacy for miles and miles. But how long can they take this kind of stuff? That's the question. They just can't take it much longer. So, again, the approach to pharmacy is difficult, but we feel like it's harming West Virginia pharmacies. We feel like it's harming the broader healthcare infrastructure as a whole, because eventually we're not going to have independent pharmacies. And we've actually lost some independent pharmacies. I think in the past 6 months or so, there have been about 10 or 12 that were either acquired or just closed in West Virginia. So these numbers that I threw out to you may even be dated since then. And a couple have opened as well. But a lot is dependent on your payer mix to determine whether you can even have a profitable pharmacy in certain communities. We feel like that this makes the network unstable. Again, dozens of pharmacies could leave the network. Some of them just fill these prescriptions to make sure the PEI beneficiaries have access, and they just take the losses. And then very, very noble of them to do that, but I just don't think that that's sustainable. I don't think it's good policy. They don't either, and they don't want to continue. Again, Kroger left the network last year. It cost them about $100 million in monthly revenue nationwide. That doesn't just happen, right? A business doesn't just give up that kind of revenue unless they're being seriously mistreated or underpaid. So again, a takeaway from this is patient choice and access are going to suffer if this problem isn't addressed at some point. Again, some people might say that if a pharmacy closed, there are still mail order options, which again, our association thinks that mail order should always be an option for patients, always. but we don't think it's the best care. It reduces face-to-face care. You can see some of the points at the bottom. It can cost the pharmacy jobs. It costs tax revenues at the state and local level. We feel like you lose quality care and patient interaction and prescription counseling. And frankly, you just lose community identities whenever these independent pharmacies that have been around for 100+ years close their doors. So a couple ideas or solutions we could look at. What West Virginia Medicaid did, which really became sort of a national model around the country, is they moved to what's called a NADAC plus 1049 reimbursement, dispensing fee reimbursement. Now, NADAC is the National Average Drug Acquisition Cost, if that didn't come up last month. It's basically a retail pharmacy survey of what pharmacies are paying for drugs. There's no perfect way, right, to survey the country or the region about what drugs cost, but we think that this is a pretty good model. And so they removed the PBM from the spread, which we can get way into spread pricing and rebate collections and formulary decisions, which are, again, all very complicated. But West Virginia Medicaid immediately saved $54 million per year, the year that they did that, and they increased pharmacy reimbursement, because I think the dispensing fees, somebody can corroborate this for me, but the dispensing fees before they made that move were less than $1 per prescription. Once they made that move, they were $10.49 for every prescription, which, by the way, is still less than the national average to dispense a medication. It's about $12.50 or so if you survey nationwide. Even further, what the legislature did, starting in 2017 with the Pharmacy Audit Integrity Act, you moved to a NADAC plus $10.49 reimbursement for commercial claims and for ERISA claims, which are employer-sponsored plans, which means if you have a company and you sponsor your own employee health plan, you are supposed to pay NADAC plus 1049. Some of the other items that were put into code are a really nice consumer choice provision, which allows consumers to fill their script at whatever pharmacy they choose. That can't be dictated to them. There's a definition of specialty drug, which sort of reins in what I would call out of control defining of certain drugs that are just very expensive as specialty drugs, instead of just drugs that require some kind of expert handling, refrigeration, things like that, counseling, things like that. So again, what are other states doing as opposed to just West Virginia? They're doing some audits. Some of those are legislature commissioned audits. We feel like the price checks sometimes that health plans do are not truly objective and independent, don't like them. I think that they're tailored more for the traditional PBM model instead of some of the newer model PBMs which have come out, which are called transparent PBMs or pass-through PBMs. And those are out there, by the way, and again, I'll get to this in a minute, but we do think the PEIA needs to look at that model as an option to stop their out-of-control drug spend, and it is out of control if you look at that on a graph or look at the trend for PEIA. There have been some lawsuits filed around the country. Ohio is the most recent. Oklahoma has come up through the courts. Arkansas actually came up through the U.S. Supreme Court years ago with a unanimous decision in their favor. And there are some others about to be filed now. One of the things, again, I tried to highlight some of the terms I really would like you to take away. Lowest net cost in drugs, to me, is always the goal. So whether you're buying a car or you're going shopping or you're buying prescription drugs, you need to get to a lowest net cost number, which doesn't include, it factors in everything, right? I use the car analogy because sometimes, you get rebated or you get discounted. There's things like that after the price. You need to get to your lowest net cost, no matter how you get there. And we're just not doing that with drug pricing right now, especially at PEIA. What we're doing is we're probably, in my opinion, overpaying on the front end to pay for drugs and then getting rebated on the back end. But the one thing I know about drug rebates is when you get a drug rebate, it's because you paid too much on the front end. And so we've got to get away from this, what I call rebate chasing, and get, again, to the lowest net cost of the drug. You don't wait on a rebate a year later. I've heard some people describe drug rebates as a $1 billion 12-month interest-free loan to someone else while you wait for your rebates to come back to you later. And Ohio Attorney General Dave Yost just filed this suit, I think actually about 2 weeks ago, I guess. And I've got to say some of the things that are going on to obscure the transparency around drugs are just mind-blowing. Some of the PBMs, he's accused some of the PBMs of using out of the countries of Switzerland-based companies to actually hide or obscure the rebates that they're collecting, sometimes to circumvent some of the regs in the United States. We'll see how that, I can't really comment on it. That's in the weeds at another level, but we'll see how that turns out. So let me leave you with this, I guess. Transparency. I want to make a couple of recommendations if you entertain me. I think that PEIA, in order to succeed and stop their out-of-control spending, has to leave the traditional PBM model, which is, again, you pay for drugs up front, you get rebates on the back end. There's not a lot of transparency. They need to invite other types of PBMs to bid on their book of business and try give them an actual realistic opportunity to win the bid. So what I hear from the transparent PBMs I've spoken to is when they bid on a book of business, they can't possibly win because their model is predicated on lowest net cost. It's not predicated on giving the state rebates back. If you judge them based on how many rebates they collect, they lose 100% of the time because they don't collect rebates. They let them flow through to the plant, PEIA. So they're going to lose that no matter what. I do know that PEIA has enormous flexibility in how they craft bids, how they award contracts. They're exempt from a lot of the purchasing and procurement rules out there. So they could do this right now if they wanted to. We actually had a transparent PBM bid on the PEIA book of business for the first time ever this past year. They came nowhere close to winning, but I think, and I don't necessarily have the data to back this up because I didn't see the internals of the bid, but I think they could get us to a lower net cost, but they weren't allowed to show that lowest net cost the way the bid was written. Again, I'd like to have folks talk to their local constituents, talk to your independent community pharmacies and just see what they say about PEIA. This is what I try to do all the time, visit them, talk to them about what they're seeing locally at their pharmacies, speak to their patients, but they are suffering right now. They are being paid under cost. They are afraid for their patients. Some of them have even sold their pharmacies because they fear the reimbursement reductions coming in the next few months, and they're closing doors. I do think that PEIA should shift away from their current reimbursement model and adopt a very transparent model like a NADAC plus 1049. Again, national average drug acquisition cost. It's the true cost of what drugs cost around this whole country. And again, 1049, that's a dispensing fee. It's actually lower than the national fee to dispense a drug, according to some studies. There are 3 or 4 different large pharmacy groups that get together every couple of years and do a survey of what it truly costs. When I say to dispense a drug, I say the cost of the pharmacy, the label, the bottle, some of the overhead that goes into running a pharmacy, so things like that. I can't imagine a business where you're expected to get paid at cost and not get paid any dispensing fee, which, by the way, is what is typically happening at PEIA. Their dispensing fees, most of them are zero right now. So we want to make sure, the other thing is to make sure that PEIA is actually paying the correct price for the drug. You know, when you talk about NADAC being paid to the pharmacy, you also would like to see the PBM charging the pharmacy NADAC for the drug on the front end. And again, there's a lot of complication and variables that go into that drug process. Again, PEIA needs to focus on lowest net cost, not chase rebates, not look at fees, not look at discounts, not look at other things. I mean, and the state of Minnesota is sort of a trailblazer in this area. They hired a company that ran almost a reverse auction to force down costs. So they moved from lowest net cost backward instead of working forward to get to lowest net cost. And they think that they're going to see some tremendous savings. Again, finally, just to stabilize the PEIA pharmacy system, the legislature, I think, did a very reasonable thing with Senate Bill 268 to shore up the healthcare infrastructure in West Virginia. We would like to see the same sort of action be taken when it comes to pharmacy. And we do think that long-term savings are possible, especially with our fantastic law, which is a national model all over the country in the Pharmacy Audit Integrity Act. So again, I'll say in summary, you know, our pharmacies want PEIA to do well. We want it to be stable. We want it to thrive and succeed. We want to accept every PEIA patient that comes through the door and never have to turn a patient away. or fill below cost. And we feel like the time is right now to solve this problem. And so patients and independent pharmacies alike really are asking for the legislature's help in bringing transparency and improving the system. So thank you very much, all of you, and glad to answer questions if you'd like.
Thank you for your presentation. We have about 5 minutes for questions here. Do you have any questions, Representative? Delegate Summers.
Hi, thank you, Mr. Chairman. Thank you, Matt. The Pharmacy Audit Integrity Act has caused some employees to lose drug coverage. Can you help explain that, like why that is?
I'm not familiar with employees losing drug coverage. So here's one thing I've heard about the NADAC plus 1049 change, the reimbursement change, if that's exactly what you're referring to. If you look at a dispensing fee of $10.49 in a vacuum, isolated from the rest of the elements of a drug claim, I can see where a health plan would say their costs went up, right? Say last year they were paying a $2 dispensing fee. This year they're required by law to pay a $10.49 dispensing fee. Math tells me their costs went up. The problem with that is you can't look at any of these issues in a vacuum. You have to look at them together. What I would tell that plan is if they were being charged the NADAC price for a drug, that $10.49 dispensing fee is completely irrelevant because they were probably overpaying for the drug. And if you don't care if I give you one example, there's a plan in West Virginia that before that bill, before that law was signed into law, they were being spread priced. And I mentioned this earlier, which meant the PBM was charging their plan more than they were paying the pharmacy for that drug. There's a drug called Humira, really expensive brand drug. The plans before that law was being charged $11,500 per prescription for that. After that law passed, they were paying about $3,500 for that same prescription. Now, if you look at that, that's an enormous savings, right, on the drug cost. They did have a dispensing fee before of $2 and it went to $10.49. What I would contend is that's still an enormous savings. You have to look at these things together. I know I didn't exactly answer your question. I don't know of anyone who could have lost coverage.
You're probably right then. They're probably looking at just the dispensing fee and not the price of the drug, like not looking at the whole thing perhaps.
I agree with you. And I think looking at the cost of the drug, which is the whole reason behind NADAC, is the key to this. The dispensing fee is insignificant, really. I guess I shouldn't say that. It's important to the independent pharmacies rather than getting zero, but the cost of these drugs is the significant piece of the equation.
Any other questions? Delegate Tully.
Thank you, Mr. Chairman. Thank you, Matt, for being here with us. You mentioned that the loss to the independent pharmacies, or any pharmacy for that matter, could be greater than three times on brand drug. Can you tell me the top 10 loss leaders that your independent pharmacies feel, or can you get a list for me of the top 10 drugs that they lose money on?
Absolutely, I can.
Okay.
They will all be brand drugs, and they will all be 90-day mandatory fill. When I say that, I don't mean to throw these terms around loosely. You know, when you dispense a drug, you're theoretically dispensing a 30-day supply. Because you have to fill a 90-day supply of some of them, it grows, and sometimes exponentially your loss.
Oh, and you mentioned there were special contracts with that kicks into that provision because of that. Can you give us any details on that? Can you describe any of those provisions that are in those special contracts?
Sure. So when a pharmacy contracts with a PBM, and that's whether they contract directly or through what's called a PSAO or however they contract, there are different networks, and those dictate the reimbursement. So if you fill a PEIA script for 30 days, you are going to get paid under one set of contract. If you fill a different script for 90 days, that's a wholly different contract and different reimbursement methodology. So whereas that's why I say it doesn't make sense to just say you multiply the loss by 3. It's not that simple. You're looking at a different contract and the reimbursement actually goes down, and you do only get one dispensing fee for that 90-day fill instead of 3 of them.
And so PEIA would be negotiating these with the PBMs, and so it's really up to the PEIA negotiating skills with the bid.
Yes, I think that PEIA should do a better job of selecting their PBM and negotiating with their PBM, because what they've allowed to have happen is for these pharmacies to be seriously harmed and thus their patients to be in jeopardy of not having access.
And so Express Scripts is the PBM now? And who was the previous PBM?
CVS Caremark.
Okay, so here, and then there's a number of PBMs nationwide that people can contract with, correct? And they want to come in. Do you know how many bids that they get, or is that a better question for PEIA?
It might be. I know that I thought they got 4 or 5 responses to their RFP in 2022.
And you mentioned like the bids through a book of business. What all does that entail? So what is entailed in a book of business when a bid is placed?
So PEIA's book of business, of course, just encompasses PEIA, if that's what you mean. Although the PBMs nationwide have enormous amounts of lives, millions, tens, or even hundreds of millions of lives that they manage for different companies.
Thank you.
Any other questions for our presenter? If not, I have one brief question. On your issues slide, you talk about the ESI network and Kroger leaving at $100 billion or $100 million a month revenue loss for them. Now, is that nationwide just for PEIA, or did the whole ESI network got dropped by Kroger's?
So that's a nationwide number.
Nationwide.
And I didn't read this. I can't speak for Kroger, of course, but what I've read is that Kroger elected to leave the Express Scripts network nationwide, which really impacts thousands of plans nationwide, which includes PEIA.
Okay, certainly. Okay, no other questions being seen. We do appreciate your attendance today and your information. And I'm sure you'll be available afterwards. Now, for the members of the committee, I hope everyone got a copy of a letter. You should have got a copy of a letter from PEIA that addressed 2 issues from our last meeting. One was how is a drug classified as a specialty drug? And the other one got back to Delegate Tully, had some questions about first responders and their access to care. So you should have got an electronic copy of that in the last few days from the last meeting. Next on the agenda is Melanie Duke, the Executive Director of the West Virginia Board of Risk and Insurance Management. If she would come forward. Thank you. We welcome you to Marshall University today. I hope you don't need that to cry on.
No. Allergies a little bit.
Okay. If you raise your right hand, repeat after me. Do you swear or affirm that the testimony you're about to give is the truth, the whole truth, and nothing but the truth, so help you God? If you state your name and position for the record, and the floor is yours, and we look forward to your presentation.
Melody Ann Duke, I'm the Executive Director of the Board of Risk and Insurance Management. Some of you may or may have not heard this speech before. I did appear last month and gave this same presentation to some members of the Judiciary Committee. But I was invited to speak to you guys about our agency. Some of you guys may know about BRIM or may not know about BRIM. I've been with BRIM for about 29 years. Started right when I was still in college and have grown with the agency and now the director and get to answer all the tough questions. So we're going to just kind of go through a few things. The presentation is longer in paper form than is what I'm going to actually speak on. That way I wanted to get you as much information as possible. So that way if you have questions, you'll have all that information in front of you. So I'm going to quickly go through some of the slides today. But just, basically touching on the background, our programs, and our departments. So BRIM was created in 1957 by the legislature to be the sole purchaser of insurance for state agencies. At that time, state agencies were purchasing insurance on their own. So they would be purchasing products that were not the same. They were not apples to apples. Somebody may purchase a limit of $250,000 not knowing that they needed a higher limit. Or some may purchase limits that they didn't need. So there was a lot of variety of different products and whatnot that was out there. So the legislature decided, let's have one agency go out and be our expert. Let's have them purchase the insurance for the state in a package. And then this way, all the state agencies would have the same coverage. There would be consistency, and there would be no difference in coverages or limits. Our mission was to be that central agency. We have a specialized knowledge of insurance and expertise. We secure reasonably broad protection insurance against losses for damage or liability to state properties and activities. The current limit for state agencies is $1 million. So our centralized services, you know, it's helpful because we are the ones who can go out there and get that knowledge and help all of the state agencies when it comes to their different programs, because we have a variety of different state agencies and their operations vary. We have Department of Natural Resources. They're totally different than the Board of Pharmacy. So the products that we have is to be able to encompass all of them, and that's why it's very broad, and we purchase a blanket type policy. So that way we can cover all of the different operations for the state. Without BRIM, what would that look like? So if you didn't have BRIM, each agency would then have to have somebody in their office to be that specialized person to help them understand all the different insurance. They'd have to understand the insurance market, products, and services. This would create a lot of inefficiencies and lack of budget stability and legal uncertainty. BRIM's able to go out there and understand the market and find out what's the best possible product out there. And we have actually created a product that's unique to most other states. We are in an organization called STREAMA, and we have 35 sister states in that organization. And what we found is that all states are different in how they have to cover their agencies and what they cover. Okay, I'm going to deviate just a little bit. This information is further down in the slides, but I just kind of wanted to give you the whole picture about BRIM. In 1982, we were mandated to provide general liability insurance for the boards of education, the county boards of education. Their limits at that time was $1 million for the underlying policy. We were also charged to purchase an excess policy of $5 million. So in today's time, the underlying policy for the boards of education is $1.25 million, and we still have the same charge of this $5 million excess. So we have two separate programs. We have our state agencies, which actually encompasses all of you guys, and then we have a non-state program, which consists of boards of education, cities and towns, county commissions, other governmental agencies, and nonprofits. So we have some oversight. We do have a board. We have a 5-member board, 4 of which are appointed by the governor, and the 5th member is the Vice Chancellor of Health Sciences of the Higher Education Policy Commission. Of course, there's some additional information you have then that you can read at your leisure. Staff, we are a small staff. We have 27 folks in different departments: loss control, claims, finance, underwriting, and the executive branch. We all have certain types of professional qualifications, certifications, and licenses. So what do we cover? As I mentioned, we have a broad product. We have commercial general liability, personal injury liability, professional liability, which is also known as medical malpractice, stopgap liability, which is the deliberate intent portion of a workers' comp program, wrongful act liability, which is not many people understand that term. It actually, so wrongful act liability is the actual or alleged act, breach of duty, neglect, error, misstatement, misleading misstatement, or omission. So some products out there in the marketplace may call this like directors and officers, but our product is much broader to be able to encompass all of the activities that are needed by the state agencies and our other non-state programs. We also have, of course, auto liability and physical damage, cyber liability. West Virginia was one of the first states to actually purchase cyber liability insurance in 1994. And that's something that we're very proud of because we were trying to get ahead of the other situations in the market. Board of Education excess liability, which I mentioned, the aviation and drone, which is only for our state agencies, statutory bond, which is for our state agencies, boiler and machinery coverage, first party coverage, and crime. So we definitely provide a very robust product to the state agencies in our non-state program. So the one thing that we are unique is we actually drafted what's called a manuscript policy. It's not an ISO-based policy. It's manuscript in that we wrote the policy and AIG, whom we contract with, puts it on their insurance paper. And then the other details of the organization works out into the financing arrangement. Those are other details. But this manuscript policy was designed for the state. As I mentioned, it's very broad. We can save money by securing multi-year pricing. We partner with private sector for products and services. And if we didn't outsource some of our services, we would need triple the staff that we do. But we actually are just the administrator for almost like a private market company. We use all their services and we are the managers of those. As I mentioned, we partner with other individuals, adjusters, engineers, HVAC inspectors, actuaries, and as I mentioned, we would need more staff if we had to bring all those services in-house. We secure vendor contracts and have all those out in the marketplace to help us with their expertise. As I mentioned, AIG. The contract from AIG originated in 1995 and went to 2004. And at that time, the way we paid the premiums was to pay $24 million directly to AIG. And then we were retroactively billed when losses exceeded the amounts that we had put on deposit with them. In July 1st of 2005, we established a new financing arrangement where we would pre-fund a trust, and that's where we are at today. Our independent actuary develops the premium amount that is needed for each calendar policy year, and that amount is put into a trust, and the beneficiary is AIG. With that, the investment income is in the trust and also would help to go and pre-fund the trust years. They have to be pre-approved instruments, and AIG doesn't have a lot of oversight as far as the instruments that we are allowed to use. We use currently the Bank in New York and their services for our trusting and investment oversight. Kind of understood wanting to go in and talk about our finance department. That's definitely a big key for Brim. We do have an independent audit each year from, and this year currently it's on Orbis now. It used to be a different company name. They were purchased recently. And they come in and they do a financial audit, and we have financial audited statements. We also have an independent actuarial services. They provide us with quarterly reviews, and they also provide us an end of the year snapshot in time. And our actuaries will look at that, and the auditors will look at that, and they will each agree that we are funding what we need to fund, and our liabilities on our financial statements are what they need to be. So, you want to have to make sure that your finance department has many objectives. We want to make sure that we maintain sufficient funds. We want to make sure that we keep things as stable as possible so there's no rate fluctuations from year to year for our insureds. We want to make sure that we have a good overall return on investments, which everybody knows right now is not possible. Hopefully it will improve as the years come through. We want to make sure that we have sufficient short-term liquidity needs and that we meet or exceed key financial ratios. So from the investment piece, we use the Board of Treasury Investments for our cash liquidity needs short term, and then we also use the Investment Management Board for our long-term needs as well. And they are the ones that actually develop and have the plans put in place to help us with our investment funding. I mentioned, I'm flipping through these real quick, so you'll be able to read all this later on. There's a lot of good information here. One thing I did want to point out is our financial ratio. RIM, as I mentioned, is we are a state agency, so we do not have a profit margin built into our rates. So that is one unique factor that if you were purchasing insurance in the marketplace, most companies and carriers are going to, they're going to have a 28, 26, 30% factor built in to be able to make sure that they have a profit. BRIM, that is not our focus. We do need to cover our costs, which we try to do so for each year. Those costs include like our general administrative costs and also our current and forecasted loss projections that our actuaries provide. And I wanted to kind of mention the expense ratio. As I mentioned, we are at 6%, whereas other carriers in the marketplace, they're going to be under in that 26 to 28% range. Claims department, we handle the oversight of claims. As I mentioned, AIG is the adjusters that are the boots on the ground. They handle all the liability claims, but it should be noted that the adjusters have levels of authority. The AIG adjusters have level authority. Our internal adjusters have levels of authority, but BRIM has the final authority limit when it comes to if there needs to be a payout of, the limit of $1 million. And we designed it that way because we like to be able to have some control over that. If you go to the marketplace and purchase insurance, BRIM would not be able to have that control. So that means the state would lose the control over some of the claims that have maybe a political aspect in nature. As you can see, these are just some various types of claims that we see. Definitely not all of them, but the majority of them. We have, as I mentioned, some staff who are independent licensed adjusters on our staff, and they provide the oversight and investigation and help AIG by monitoring what they do, and that we work hand in hand in partnership with all those. There's a lot of triage and notices that come in. Approximately 8,000 claims or notices per year. Some are notice only. A lot of the school boards will send us, Johnny fell on the playground, they'll send us those types of things, and they're set up as a notice only, and only would be changed to a full claim if there would be some other types of allegations or a suit filed. We also do property and mine subsidence in-house, but we also then go and purchase services from adjusters who are the boots on the ground. It's not through AIG. They're independent adjusting firms that will go out and look at all the property situations when there's a loss that occurs. Underwriting department, as I mentioned, we have about 160 state agencies, boards, and commissions in the state program. In the non-state program, the numbers of 960, we're up to about 980 of a variety of different entities. As I mentioned, it's the boards of education, the cities and towns, the other governmental, which are like transit authorities, health departments, and things like that, and then the nonprofits, which is a variety and is one of our bigger portions of the non-state program. So the non-state program, when it was implemented, there was a hard market crisis going on, and these entities could not get insurance in the marketplace, or they couldn't afford it. So the legislature at that time drafted Senate Bill 3, and it put BRIM in this market. We are an alternative. We are not to go out and advertise for our services. We are there only as an alternative to the market when these folks cannot get the insurance at a fair price, or they can't get it at all, because when there is a hard market, a lot of carriers choose not to insure certain types of organizations. So they will come to BRIM, and we will underwrite them based off of information like their loss history, the premiums, that they currently pay, what they actually do, what is their mission, and we will provide a premium quote to them. And 9 times out of 10, we usually, get those types of businesses. Cities and towns, we are probably in the middle in that we usually, most of the cities and towns that are with us are like the middle to smaller range. We are just not as competitive when it comes into the bigger cities and towns. And that's okay, because they need to be getting their best dollar that they can get, and if it's in the marketplace, and that's where they need to, to secure that. But what we've seen is a lot of these smaller cities and towns, these other governmentals, and definitely the nonprofits, it's very hard for them to find competitive pricing in the marketplace. Or they don't want to cover everything, and it's a much smaller, broad, where our policy is broad, their policy is much smaller, and it's ISO based, it's true transfer. They don't have as much control as BRIM they would have with BRIM. So both programs are pretty much structured the same, the state program and the non-state program. Both are through AIG. Both have the same almost factors as far as the policies. We do have some additional policy things for our state agencies because that's our focus. We want to make sure that they're able to do the things that they need to do and not have to, when you're in the private market, sometimes you have to go to an underwriter and get approval for whatever service or class or whatever it is that you want to offer. Whereas with BRIM, our protection is so broad that we're able to let them do whatever operations that they need to do, as long as there's mitigation and safety measures put into place. As I mentioned, here's some of the different folks we have. The other governmental, I mentioned transit, housing authorities, volunteer fire departments, for-profit ambulances, PSCs, solid waste authorities. In our nonprofit, we have some nonprofit health clinics, public defender services, and our other nonprofit folks. The other nonprofit individuals, there's a lot of senior centers, there's a lot of crisis centers, there's a lot of just different, those social services that are needed for our constituents and our individuals who live in this state. And should they not be able to have coverage, those are services that may then have to fall back onto the state. DHHR type things and programs that they would have to have more robust types of programs if they were not able to provide services to these folks. In the underwriting department, every year we collect information to help us rate our rates. For the premium perspective, we work with our actuaries to be able to develop premiums that fund BRIM in the manner and our trust that we need. Loss control. This is a big focus and one which we are proud of. Prior to our loss control manager joining us in around 2004, it was a loose type structure, and he has developed it to where there is annual loss prevention inspections on selected state structures, usually anything over $1 million. We have contracted with Tawny Insurance that they will go out and look from a liability perspective to make sure that the facilities meet code definitions by OSHA, and that if they see anything that looks like that there might be a hazard, they will put it in a report. We ask that entity to provide a plan of action back to us, and we follow up. We want to make sure that they put those safeguards into place for all of our individuals who visit public services. They also make recommendations or eliminate and reduce the opportunities for claims. They establish loss prevention standards. They provide also a standards of participation program for credits and surcharges to help insureds to be able to be invested within the plan. And so if they are doing the things they need to do, they could possibly get a credit on their premium. We also have education and have public information presentations. State Privacy Office. Prior to coming to BRIM, the State Privacy Office was housed at the West Virginia Healthcare Authority. And when the West Virginia Healthcare Authority was moved under DHHR, then BRIM was the natural fit for them to come to us. They help us with all the executive branch as far as privacy. There's many privacy officers. We have meetings and training. They work with us hand in hand when we have cyber incidents help us work with our brokers and our insurance carriers for the state cyber program. We have a meetings that individuals are participate in, and we hopefully provide training to them that they help them to understand about personally identifiable information and personal health information. Questions? That's a a lot of information for you guys to digest. You may need to ask me some questions at a later date, and we'll look at those.
Okay, we have Senator Tarr.
Thank you, Melanie. I've got a lot more questions than we have time allowed to have these questions, but I would like a list of the nonprofits
I can do so.
in entirety,
Yep.
and then maybe set up an appointment in my office so we can go over
Perfect.
that.
We can do that, sir.
For the benefit of the members of the committee, I will add that just as last time, PEIA responded back in writing to the questions that we had. We've got about 5 or 6 minutes for questions, but any questions that don't get asked, please submit them to the clerk in writing. The clerk will forward that to Bram, and we will get a written response by the next meeting, which, well, will be 3 months from now, so it may not be a while.
You're giving me a lot of time. That's
Yeah, you
perfect.
have a lot of time. Okay, any other questions? Delegate Westphal.
Yes, thank you. You will talk a little bit about the loss problem you're having right now with the school
Right.
/ church program going out of business.
So some of you guys have probably seen there have been some different claims centered around county boards of education is one group, and then a nonprofit entity that we had insured for a number of years. The county boards of education, some of those are very public in nature. You've seen them. Some of has been on the news, the Holtz and Horace Mann schools with the abuse in the special needs children's classrooms with the video, was caught on video. So we are seeing an increased amount of claims in that area, and also the payouts are much higher because, as I mentioned, they have an underlying premium of $1.25 million plus the excess of $5 million. So we're seeing that issue occurring, and that kind of started around 2020 is my understanding. So yeah, increased claim filings, increased demands. It's becoming a issue for the county boards of education because their premiums are increasing drastically. Brim did try to, in the last session, to have a bill that would have reduced the excess insurance and only had to let the $1.25 million underlying in an attempt to negate those increased premiums, but that bill failed. And so as of 7/1, most boards of education, their premiums are going up to 150 to 200%. And that's just to cover the losses that we're seeing and the projections that our actuaries are, projecting for the future for those claims. The other loss situation that we have, as I mentioned, is a nonprofit, and there was several in-depth allegations of abuse, physical, sexual, mental in nature, and Brim started receiving claims from that nonprofit group in 2017. There was an initial about 30 individuals who had filed claims. Brim was able to settle those. There was also a settlement by the affiliated church that the nonprofit was part of. So if you've seen in the news, they threw a figure out of $52 million. That was not all paid by Brim. Brim only paid $27 million on those claims. After that, there was a statute of limitations change that was made, allowing individuals to file claims. The prior statute of limitations was 18 plus 2 years. So at 20 years of age, anything after that, they could not file claims. The statute of limitations changed and now allows 18 plus 18, so up to 36 years. When that change occurred, we have received about 110 individual claims from people who attended that school, that nonprofit school. That's where our issue is coming now as far as, a deficit in funding. The way premium calculations work is you go back and have a five-year look back period, and that's how you develop your rating structure. So since these claims happened prior to the last 5 years, they occurred anywhere between 1999, as some of the allegations, and up to 2000 and 2012. That's outside of our rating period. So we have to rely upon our reserves that we have accumulated. So we are, as you can imagine, quickly depleting those. And we also, you can't just pay out all your reserves on one matter. You have to make sure you have reserves adequate for all of your members. So we were successful in moving some excess money we had in a mine subsidence program to help us offset these claims. But it's something that I will be approaching the legislature at some time because I will not have enough funding for reserves available to pay all of the claims when they come out. We're still in, of course, litigation, so I can't really go into a whole lot of detail as far as the individual matters. But what we have done to be retroactively with that is we have developing endorsements on the policy for the nonprofit entities where the entity would only have $1 million per occurrence with a $3 million aggregate per entity. This would drastically help us going forward, and unfortunately will not help us retroactively, as that's would be a legislative matter. So that's a lot of information. I know there's lots of questions around that, and I can definitely, if you give me some written questions, I can give you some more.
Yeah, so please respond, Delegate Tully, and then we'll have to cut it off.
Thank you, Mr. Chairman, and thank you, ma'am, for being here. I would like a list of all of the non-state agency participants, not just the nonprofits, if that would be possible. And you mentioned for non-state agency program participants, how do they prove that they can't find affordable or adequate coverage on the open market?
Right. So normally what happens when there is an insurance agent of record that works with, if this was developed as well with that program, then they work with that individual, helping them to go shop for whatever coverages that they need. And they'll come to Brim and ask for a quote. So normally we'll get emails that we'll talk about, we couldn't get it, we were non-renewed. So those are documentation pieces that we put in our file. We don't currently have a good, robust system that would say that you have to go out and provide documentation. But what we ask for is the premiums that they recently were paying at a prior insurance company. So we do have that information as well as the losses that they had during the last 5 years. So that's the pieces of proof, but there's no, it's not an annual type check and balance, but it is, but we do caution them that they always need to be searching for coverage because we are an alternative. They do not have to be with us, that we are definitely there as an alternative to the market.
You mentioned this nonprofit agency that we had this large loss on. That was a previously enrolled nonprofit agency in the BRIM program. Is that correct?
Correct. They were in the BRIM program from 1999, I believe, until 2014 when they were closed. There was some wrap up of the individual institution, and they actually were no longer a participant in BRIM in 2020. But there was no school or school-age children at that program after 2014. It was just, a director to help close the program out.
And so for state agencies, I know that we've had a lot of allegations that have circled around the West Virginia State Police, and those allegations coming from, the academy and those sorts of things. What is BRIM doing to look at some of those to prepare if say that there are settlements that come forth from that, or there's litigation that comes forth and the finding ends up not going in the favor of the West Virginia State Police? What is BRIM doing to look at the issue that we could potentially have with that?
Well, so of course, we don't know everything because most of these things are just now getting filed. There's not been investigation done on our side with the AIG adjusters. I know that there's been, of course, investigation on Homeland Security side. So it's still a little too early for us to know what all the details of the allegations are. So once we get that, you look at, there's a lot of investigation, triage, that type of thing. So I really don't have a good answer for you right now. I'll have some more as it develops, but we are starting, to see what we've heard out in the news about people saying that they're going to file. We're starting to see those.
And some of those are juvenile, so that rule that you mentioned would apply to that. And so that would be also another concern that we would have, correct?
Right. The one thing I guess I would mention on the state side is they have constitutional immunity. So we're a little bit more protected and insulated, but still yet, yes. And that the statute of limitations on the state side could be impacted as well. We have a lot of DHHR, children's services. We have a lot of juvenile correctional facilities and whatnot. So the issue with the nonprofit that we're saying, those types of things could also occur on the state side as well.
Thank you for the information. I appreciate your time.
Okay, and in the interest of time, we will have to move on, although I think Delegate Tully raised some excellent questions, and I suspicion towards the fall or winter, you may get the opportunity to come back in front of this committee and give some updates.
Yes, but thank you for having me, and I appreciate all of your all's interest, and hopefully I can educate you guys about Brim, and we can work together on a.
Again, anyone that has any other questions for Brim, please submit them in writing to our committee staff, and we'll get you prompt answers. With that being said, since we do have a meeting afterwards in this room, immediately hereafter, Chair looks to the co-chair for the purpose of a motion.
Mr. Chairman, I move we adjourn.
Have the co-chair moves that we adjourn. All those in favor of the motion, please signify by saying aye.
Aye.
Those opposed, no. We stand adjourned.